Hello, babies and gentlemen. Dak here, Sal, whatever you want to call me, from T-Look. And today I'm going to talk to you just a little bit about the so-called credit crisis. Why am I doing this video? Well, because some days ago, a friend of mine from YouTube, Maragov, has posted a bulletin which I found quite interesting. Really, it was quite interesting. I went to visit that site and I'm going to post the link in the video description box because I think it's a very important thing for people to notice. And that post had to do with Federal Reserve of St. Louis data about total bank credit of all banks, and then divided by a type of loan. For instance, commercial loans, industrial loans, personal loans, residential loans. What you can see in that article that I'm going to post is that the total amount of each and all of these types of credits has not decreased year on year. This meaning that banks are increasing their credit offer relative to past years. So, how is this compatible with the notion that there's a credit crisis, you may ask? And it's a pretty valid question. I myself got a little bit weird about that data. So what I did was I took the chart of the total amount of bank credit, and I selected the filter option for change from year ago, and I'm going to show that chart to you. So the important question here is to understand, how is credit crisis real? In what way can it be real if there is more credit now than it was? So this is the chart. So as you can see, what this means is the change from year ago in billions of dollars, okay, in concession of credit. And what do you see from 2000 forward? You see, of course, like ups and downs, but you see that the tendency that you could draw by drawing a line, okay, passing through the minimums of those troughs leads up, right? So this means that in every point of the chart, you have some sort of increase in the amount of credit relative to a year ago, right? So this means that just recently we have over $1 trillion, 1,000 billion dollars more than a year earlier. But what do you see after that? You see a steep decline. So this means that, for instance, from a year ago till now, you have just, and I say just with a kind of a smirk, like less than $500 billion more than a year ago. So you still have over almost $500 billion more than in the previous year. But this has to be contextualized because you see the increases in wealth, you see the increases in GDP, and you see that it is related to a general increase in the momentum of the concession of credit. So if you draw that trend line, you see that it was recently uh, broken down, and broken down severely. So it is a steep decrease in the velocity of concession of new credit, and this is what the credit crisis really is and what it means. This, of course, added to lots of problems in the short-term markets, but I don't want to go into that. So I hope this was helpful to you guys. Take care.